Okay, so a few of the targets to the downside were actually met for Nrgv, and it seems as though we got a nice little bounce from that bottom side. I want to know, though, if it actually is the bottom side that we were expecting, or could it be that we still have a little further downside into the areas of 186 to 187 to pick up risk and then continue the upside? Well, we could go ahead and figure that out on this episode, I guess we can call it, right? But first, please do me the favor, team, hit that like button, subscribe to the channel, do everything necessary to get this thing to live a long, thrive, and survive, yada, blah, 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 right? So, my name is Arca, coming at you at about, let's see, 10:52 p.m. Pacific time, September 4th, Thursday, and we're just going to go ahead and get over Nrgv here real quick. So, mathematics will tell us here if we have continuation to the downside, but does formation theory tell us that we have further downside in general? Well, it does appear that we're still in the building here of a potential head and shoulders formation. Now, if we have a head and shoulders formation building here, well, that would give us some interesting information for downside continuation. Now, let's use this as a potential left-hand shoulder, and we'll use this as the potential building blocks of a right-hand shoulder. If that is the case, then it appears that as though, our regression is kind of there, right? So this would appear that we'd have a little bit further a downside, but remember that this is only the psychological aspect of it. This doesn't mean that it's actually going to happen. It just means that we have this in the present making, right? So let's just go ahead and take that into consideration. Apply this to the center of the right hand shoulder here, and that would introduce a 170. But right away, I can kind of tell that 170 may be a bit obscure, seeing that we do have a very interesting 50% distribution zone right here. Now, what I mean by a 50% distribution is that if you take a measurement like this to that top side, well, that introduces to you a 50% of distribution right in here, which has a hard target of this point here. Meaning that this low here to this high here has a breakout zone of 50% in this general vicinity. So should it be that we actually have that in the works for us, will that actually tell us that we're going to move towards the upside? Or is it in fact that we're using a different vicinity? What about if we drew from this point here, right? What if we drew it from that point there towards the upside here? Well, that 50% of the area is right about here, and price is literally there at exactly the 50%, 208. Okay, well, that can add a little bit of confusion here. So, and now also seeing this, check out the volume, right? I mean, I'm sorry, the candles, right? Just the candles. Simply speaking, just the candles. Check them out as they appear to be growing a little weak. But I want you to also know that the weakness should be on the upside here, because what if now, there's a whole bunch of what ifs, of course. What if now we're building a dead cat bounce? Now, would the dead cat bounce give us any information whatsoever? Well, if we put it towards the bottom side here and get our target to the downside, well, it appears as though it would be this anyway, right? Still at the 50% distribution. Well, remember, guys, that these are just the workings of a psychological move. And that's fine. That's okay. Because the thing is that once you break out of a critical area, well, there typically would be there would be the workings of kind of retracing, validate that before continuation. And now I'm gonna go ahead and also say that there could be if that fails, there could be something a little more obscure, a little more. It's just this has me a little bit more or less optimistic, right? So which means that this can actually diminish your hit. So let's just say that, right? We use this as the common ground for the shoulder, head, and the shoulder, right? Let's just say that's the case instead. Well, where does price tell us, right? I mean, it's still going to be in, somewhere relatively lower, but it's still not as big of an impact as the other one is suggesting, right? So the center of this shoulder, yeah, I guess it would still be there. So this would actually drop it to maybe 172, 2 cent difference, whatever. Okay. So what my point is that if there is an actual touch Do we have any reason to come down to this area here? This is where we need upper time frames. So let's go ahead and take a look at your 5-day trend, and let's look at everything here. I want you to notice that there really isn't so much that's relevant to this here. In fact, it would be upward or downward, right? To get to maybe this is actually the only relative thing that I see right about here. That would be 186. Okay, so we kind of solved that, but 186 also introduces these things here. Remember, we're coming down first, right? So that would introduce these things here. So now we're at 192. So if we are introducing these, since we're coming down, then all of these areas seem to kind of maybe tell us that that would be the first place to reach in the first place, right? So maybe around 210 or 211, 212. Do you see what I mean? It's like these areas that are being presented to us, they're obscure. So I think that there's a bear trap coming in. And also, we did note, let me remind you, we did notice that there was a complete correlation here to the S&P 500. And it just so happens right now that the ES is actually running into parabolic levels, right? I don't want to say parabolic. I'm just saying that let's go ahead and take a look at your daily time frame, as this is your new daily candle here. Right there. This is your prior day, which was your Thursday session. Now we're on Friday, and take a look at that. Well, it appears as though we are at all-time highs yet again. Oh my goodness. Okay, so if that is truly the case here, well, it appears as though Nrgv is set for a pretty good continuation to the upside, seeing that it does have correlation. Guys, I know that I went on here pretty long, but I want to say that if you do join the Discord trading team, the moment you join here, there's going to be someone to tell you that, and that's going to be an imposter, right? It's going to be kind of a lookalike, a twinsy. An Arca, an imposter, telling you that you should turn off your DMs and only contact me, and this is the last time I will ever contact you. Guys, that is not me. I will never contact you first. I will never reach out to you first. I will never friend you first. I will never message you first. I will never anything first. Know that for a fact, okay, guys? In fact, I want you to know that this is what my profile kind of looks like here. Let's get that video out of the way. Right now I'm streaming live, but typically there's a little red with a minus sign there to tell people do not get in touch with me, although my team members already know that they're going to get in touch with me, right? And I also have a sign here that says I do not offer copy or mirror trades. I am the one and only Arca. So know that this is me, and they wouldn't dare put that, of course, right? So with that said, let's come back right over here, team, and remind you again, team, that the tier, the memberships are going to change here pretty soon, right? They're going to be effectively changed into the coming month. And that's where I'm asking the original team to help me out with a grandfathered 1999. And for the rest of the world, it's going to be $59.99 and potentially increases or whatever into the futures as expansion happens. But for the original members, for the people who are, if you're managing to catch the positions now in the $9.99, that will be upgraded to a $19.99, and you will have to then re-sign up to Arca Bulls, should you have interest in that, guys. Okay, now that we're growing the full service Discord, that's going to be the case. Please go ahead and the opportunity is down below, where if you are new, right, and you want to go ahead and just do a one-time fee, the opportunity is down below in a description. I'm only allowing 30 people into this, and many have already taken the opportunity. So that number is growing lesser and lesser. Description below, there's the square link. So enough of the shilling here. Let's go ahead and continue on with the analysis and see what's up. Okay, so why don't we just take it over to math real quick so we can finish this off and continue on our merry way. So why don't we do this? Let's go ahead and just observe this from, volatility and momentum in the immediate short. Take a look at that huge block trade right there, right? Huge upside, 203 to around 208 at pretty much the last minute of the trade here post-market. And it does appear as though that gave us a massive pump to the upside on volatility. That usually is, let me go ahead and just swoop up. I'm in here again. Hello and hello. right? So that usually gives us an opportunity to kind of scream into the potential cascading of time, right? So let's go ahead into the 3-minute time frame. We still have upside, huge volatility, right? 4-minute time frame, upside volatility introduced. Same with the 5, same with the 10, same with the 15, right? These are all fired signals towards the upside, guys. Statistical probabilities can be found within criteria like this. Okay, so that means still upside into the 20, 30-minute time frame, still upside and about to expand, seeing that this would have to show its face at the next bar open, right? That's going to be pre-market, even the early pre-market, right, guys? I think it's going to be 4 a.m. Pacific time, 7 a.m. Eastern. Your hourly time frame still displaying upside continuation with expansion starting by hourly time frame, still upside, expansion starting, green bar close. It appears as though we still have upside on a 3-hour time frame. 4-hour time frame still has a kink, upside probabilities there, still into the 8-hour, and finally, actually 6-hour, and then the 8-hour. So let me just double check that 6-hour time frame. Can we actually make this a downside? Will it be that? You know what? I am going to do it. Let's do it. There's going to be 6 hours total upside. Seeing that we opened the market at 208, well, that would give us enough thrust for about 12 cents to the upside here. So that means that we are observing, let's see, I guess if we're going to go to 219-ish, is that fair enough? You know, 219, 220. So if that's good, where is that? Where it is at a relative resistance, I gotta say. Okay, so that means that we have a zone. So that would be, yeah, very interesting here, right? Because that this candle here, the opening of that would be that zone. So let's go ahead and take that into consideration. Just like this here. This would be the area of resistance. This would be liquidity grab at 222. So if there is downside starting from that point, so then we would have downside continuation into the 8, 12, let's say 12, yeah. Okay, daily time frame, still downside, right? Okay, getting close to an upside, still downside even into the 4-day, 5-day, where is it? Where does it stop? Oh, maybe the biweekly stops it, but it's really the monthly time frame, but I can't use the month because that already kind of started. Actually, oh damn, it started right here though. Okay, so monthly time frame worth of downside doesn't really make any sense though, because that actually takes us into 92-cent drop. So this would be equivalent to the actual downside that we're looking for. I don't know. So 92 cents takes us down below. And should we use the biweekly time frame where, let's see, we have 7 days. We just opened this one too. That gives us 46 cents of downside. Let's just validate that is what it be, right? So 6-hour time frame downside starts, and we're continuing. Statistically speaking, guys, that I'm seeing that that's what it would be. So let's just say that, yeah, you know what? Let's just follow it to the rules, and we have to invalidate the downside too. So what would invalidate it? What can stop us from continuing to that downside? Well, we've talked about this before, and I do think that it would be your major inflections, right? It would be something like this here. Now, guys, make sure to hit those ATWs in the bottom. I know that this video is going kind of long here, 13 minutes in already. We're going to go ahead and finish it off here real quick, and everything will be good. So, yeah, you know what, guys? I think the honest truth here is that there are many months with similar opening criteria, low criteria, closing criteria, and also the present month, same opening criteria as well. So if there is continuation to the downside, even though I can say that maybe we can go as low as, it is sort of confluent here, right? 197 could be the lowest potential. Do we have that in line here? Well, we do, right? We really do. It would be right around here. Let me get down to the 4-hour time frame so we can see this a little clearly, or clearer. And yeah, in fact, we have a 187 and also a 199. So these would be the hard targets against it. So again, guys, this $2 zone 199 is an area that can be used for a bounce and invalidation. And I will say that if it does fail and you go into the 190 to 187, this is your bear trap. That's where I feel that there could be a really interesting bounce. Now, that's saying that it's, guys, the 6 hour, okay? That's where I'm saying that this is going to turn. That's the 6 hour. it closed with a green bar. And the 6 hour is going to close 30 minutes into intraday. So we're going up first. You know, that's what the plan is. The plan is saying that we're going up first based on all these immediate short term, all the way up to 6 hours. So that means that 208 plus 12 cents, right? You're looking at 220. So if you're like I mean, it's if you're really up there with 12 cents between 216, 18, and those inflection areas, 216, 218, 220, if you're in there already, that means that you made a lot of upside cascading from the immediate short term. That's the trick here. So all of those time frames are going to start all over with an upside bias, and they're going to either continue or start all over. So I think there's a bear trap coming in, and guys, I'm not even going to say, without any confidence, I'm going to say that I will be surprised if we drop below 2, although it is completely possible. I'm just going to go ahead and say, like, that team, please do not trust that. Do not use it as any type of conclusion here. But the upside is still massively present on this, guys. We're closing some of these time frames here in just a couple days, and it's just huge. We just opened up the monthly, and it's suggesting upside, guys. And I'm talking about upsides into your $3 zone, right? Your bi-monthly time frame certainly suggesting upsides here into your $4 area, and I mean massive upside. So that's I think the intraday moves, guys, these tiny little nuances here they're just little farts in the wind. All right, guys, so I think this is a pretty good place to leave off. Should you have any questions or concerns, make sure to reach out to me at arcabulls@gmail.com, and everything will be chilling. Okay, guys, so I guess I will speak to you guys very, 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 very scary Larry soon. Make sure to hit that like button in the video, guys, and subscribe to the channel always. All right, peace in the Middle East, and I love you. Adios. Please take into consideration, guys, to never take anything of which I speak of here as any financial advice. Okay, no, never. I need you to do your own due diligence always, and everything will be absolutely cool. But with that said, I wish you well, a very, very good rest of your night and or day, and I will catch you at the bell mañana. Adios, team.